Hello traders, and welcome to my Gemini overview. So today we're going paragraph by paragraph on the Gemini website of their trading fees and their fee schedule. I'm going to be explaining to you guys exactly how this works and how to best take advantage of this. The reason I'm making this video is that when I began trading a while back on Gemini, I did not fully understand what all this meant, and I didn't really know what to do to get the lowest fees possible. So I hope that by today's video, you will understand exactly how Gemini bills you with fees and how to best take advantage of that. So the first thing I want to say is that I'm not affiliated in any way with the Gemini Trust Company, and that this video is purely for educational purposes. So Gemini does things differently than other exchanges, and what they do, their main trademark is their auction. They auction Bitcoin and Ethereum, and I'm going to be talking exactly how they do that and what that means. And they also have a different fee structure than other exchanges. So the first thing I want to talk about is how they calculate their fees. The base fees are 25 BPS for maker and 25 BPS for taker. And you guys can read these paragraphs, and these paragraphs here explain it quite well, and this too, these three. Basically, BPS are basis points, and 25 BPS would be 0.25% of your investment. So what that means is that if I put $1,000 on a trade and I buy, I have to pay a 0.25% fee off of that trade. So my order would not be 1,000, it would actually be 1,002.5, because that $2.50 would be my fee. And this does vary from maker versus taker. And basically a maker is one that of course provides liquidity to the order book, and the taker removes liquidity from the order book. The maker puts out a limit order that gets filled by the taker, and the taker puts out a market order that fills the limit order by the maker. And if that doesn't make sense, I would recommend looking that up or just reading this. Now let's talk about the fee schedule and how best you can take advantage of these fees. So, like you know, the Gemini exchange fee schedule has to do with your trading volume and your buy-sell ratio. When I first read this, I completely understood trading volume. That made sense. I didn't really understand what buy-sell ratio meant until I did a lot more research. And I hope that by today you can understand exactly what this means and how Gemini treats different traders. So of course, the trading volume discount is exactly what you think it is. If over a 30-day period, a trailing window, you trade under 1,000 Bitcoin, these numbers will be different for Ethereum, of course. If you trade under 1,000 Bitcoin, then these are your fees. This horizontal line right here are all the fees that you could possibly have for your maker. This means when you put out limit orders. And then they go up, as when you trade with more volume, you actually begin to get rebates. And what a rebate is the Gemini exchange paying you to trade on their platform. So let's say you trade with exactly 10,000 Bitcoin per month, and that you get the 15 rebate. That is a 0.15% rebate on your investment. So if you trade with a million, you would get paid whatever is 0.15% of that. You would get that immediately credited to your account. The reason why Gemini pays back the traders with large amounts of volume is twofold. One is that it provides a high amount of liquidity in the market, as with a lot of Bitcoin being traded, you're able to buy and sell quite easily. And the second thing is that when a large order comes through, the market tends to move in the other direction as a regression to the mean. Basically what that means is if there's enough 1,000 buy of Bitcoin all at once and you get the rebate, the market doesn't tend to continue going up after that. The market tends to regress a bit as price jumps up with that initial buy, and then it begins to come down a bit as sellers take advantage of those new levels. And then if buyers and sellers agree that those levels are what the price should be and what the price is being traded at, then the price will go up. But more often than not, when these happen at the end of an uptrend, you see a large tail and price begins to come down. So now I'm going to be talking about the buy-sell ratio. I didn't completely understand this at first, but then with some more research, I did find out exactly what this meant. You will very likely, if you're watching this video, be under the category of under 1,000 Bitcoin being traded per month. So we're going to be talking about these fees right here. So the base one is that 100-0. This means your buy to your sell ratio. This is how much you buy, and this is how much you sell. What this means is that in the past 30 days, if you only bought Bitcoin and then just held it, and you never sold it, you have to be paying a 25 maker fee, BPS maker fee on your next trade. But if you are a day trader like me, then actually you could eventually get to the 50-50 buy-sell ratio, where, for example, let's say in the past 30 days, I've bought, on 10 different trades, I've bought, 5 of them I've bought, and then 5 of them I've sold. As I enter the market and exit the market in the same day, I get the best fee possible for my volume structure. And currently I do have that right now, as you can see, with fee tier. FUSD, I have a 10 BPS maker fee because of all the buying and selling I've been doing in day trading of Ethereum. So again, basically, it's not that hard to get the 10 BPS to get that 0.1% fee. All you need to do is be a maker, not a taker, but you need to buy and sell an equal amount with maker, with limit orders. So one thing I do want to say is that if you are buying or selling with market orders, which is taking away liquidity from the market, you do not get any of these ratios or volume. Pardon me, you do not get the ratio. So if I market, buy, market, sell, 50-50%, it does not matter. I would still be here because these fees are only calculated based on liquidity making trades. And again, like I just said, it's not too hard to get the 50-50 if you are a day trader, but if you are an investor who likes to buy and hold for weeks, this is probably going to be your fee. And this is the way that Gemini can incentivize day traders to be on their platform, because the more day traders there are, the more liquidity and higher volume they have on their exchange, which might bring in more third parties to the exchange. So this is the maker fee schedule, as you can see. Same thing here, just in a statistical format instead of a visual. And same thing here. Now these are the taker fee schedules. It's not that good because Gemini really does not like, of course, any exchange doesn't want a high amount of takers, and they want to bill those takers for taking away liquidity from the exchange. And there's really not much to say here except that the buy-sell ratio is irrelevant when you're calculating taker fees, and the only reason that this would be important would be if you trade over 10,000 Bitcoin in the past 30 days. But if you do, you probably wouldn't be using taker. You probably wouldn't be using market orders. You'd probably be using limit orders anyway. So the next thing I'm going to talk about is the auction. And it took me a long time to fully understand what the daily auction was, and we're about to go to that. These are just order types, of course, and how they work. But the auction is a little bit complicated, and it actually took me about, I would say, a week or two to fully understand exactly how the auction works. The first thing I do want to say is that Bitcoin is auctioned twice a day, and Ethereum is auctioned once a day, as you can see right here. One for the Asian session, where in Singapore, it's a much better time to trade. And then at 7 p.m. Singapore time, as you can see here, and 4 p.m. Eastern time. And this gives both different consumers in different markets ways to trade. So the second thing I want to say is that trading in auction is fantastic because you immediately get the maker fees. So what I like to do is take advantage of this by buying and selling with actually market orders, but I get billed only the maker fee. Basically what that means is any trade during an auction has to get the maker fee and will also go to your maker fee reduction. So to simplify that, let's say I buy $1,000 worth of Ethereum during the auction. And as you can see, my fee was only 0.1%, 10 BPS. I would only be paying $1 on that trade, even though it's a taker, even though I'm buying with market, because it's during the auction. Every order counts as a maker fee. Also, that market buy and will actually go to my buy-sell ratio and my trading volume, and so that'll help me twofold. And again, these are the times you can put in auction orders 10 hours before. As you can see here, it says that somewhere. So what determines the final auction price? So you can actually just read this paragraph to see exactly how the auction works, and what Gemini does in a simple in a simpler way to put it. Gemini wants to find the largest amount of volume at a certain price will become that indicative auction price. So what that means is that if there's a lot of volume at one particular price, that's basically the agreed upon price by the auction. And then you began bidding on this 10 minutes before the auction begins. So that would be 3:50 to 4 o'clock Eastern is when people will be buying and selling. And then the final indicative auction price will come out at 4 o'clock Eastern. And usually the reason why Gemini does this is to allow gigantic positions to actually get fantastic maker fees. Because of the high liquidity and all the trades being simply maker, that allows positions like buying and selling 1,000 Ethereum all at once to be quite easy, because with all the liquidity of buying and selling, it's not that hard to buy and sell. And then you would also get maybe some rebates because you're using a maker fee, and you can also just use market orders. So I would say that these paragraphs explain it quite well, probably better than I can explain the auction to you. But on a most basic sense, waiting for the auction is a pretty good way to trade. If you wait for the auction and find a very good spot to buy or to sell, you're going to get great fees, and that's a great way to really lower your fees. So that's going to be it for just a simple overview to the Gemini exchange. If you have any questions, feel free to leave them in the comments. Thanks for watching.